Hey, good morning. Hey, look, it's a day, which means there's an opportunity to trade. The sun came up this morning. Actually, I'm not actually sure if it's up yet. But, anyways, hey, the sun came up this morning, and that means there's an opportunity to make some money. So, thank you, Forex. So, without further ado, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So please get involved, ask questions, treat your fellow traders with dignity and respect. This is our office. This is what we do. So let's treat it like a profession. I wore a coat for you, huh? Nice. Got my $1,000 shirt on. Does it look nice? Yeah. So, anyways, cool. So I dressed up for you. This is our office. So hopefully, anyways, treat everyone with respect. All right. So, like I said, participation is the name of the game. I'll go through the dollar pairs, I'll go through the yen pairs, I'll go through the Swissy pairs. We'll do commodities like gold, oil, and Bitcoin, and we'll probably call it a day there. If you need me to cover something specific, just let me know and I'll do my best. So, I got a screen over there and I got a screen over there. So, this is why, I'm looking around. CNBC in the back there, just, I don't know, to look good. And that's that. So, good morning. Right? Now, if these webinars are benefiting you, it's because of tradersway.com. So, make sure you pay it back. Visit tradersway.com, open an account, download FT4, pop a couple of trades, check out how fast the execution speed is, check out how narrow the spreads are, check out the amazing swaps if you want to look at the exotic pairs. But I think you'll be very, very, very happy with what they have to offer you. So at least start there, pay it back. They bring these webinars to you every day, which is great. So thank you for sponsoring, right? But then allow them to earn your loyalty and respect. And then when you're trading real money, perhaps you'll choose Traders Way as the prime broker to your successful Forex trading business. What do you think? Make sense? I know, weird time. I'm on the road, so there's no time like right now, so that's why we got this time zone. Cool. Nice. All right. So let get on with it. Get on with it. Let's get on with it. Get it on. Let's get on with it. Hang on. La 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 la. La 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 la. La 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 la. I guess this is all right, huh? About there? Yeah, boy. I guess that's good enough for the girls I go with, right? So yeah. Oh, good morning. Good morning to you. All right. So we are looking at USD Kitty Cat. This is where we left off. One of the things we were talking about yesterday is there's most likely an up before the next down. Why the likely up? Well, likely up currently is off the 21, off of the central pivot, up into the projected target for the week. So the weekly swing trade is done. Okay, weekly swing trade is done. So if you're a bull, you're supposed to, at least today or tomorrow, take some profit. And then if you're a bull, look to buy a dip tomorrow or next week, right? Now, here's the interesting thing. That's also where bears are supposed to, really sit up and take notice for a February swing trade short. Okay, so it's definitely a take profit zone for shorter term bulls. So to take a closer look, the up, there's the projected high. You've hit it. You probably should start considering taking some profit. And then the next month bear zone is right here. So the first part could simply be bullish profit taking. Second part could be bears actually selling. That's why you don't want to get in the middle of two currents. Okay. Let's do Bitcoin, gold, and oil. All right, Bitcoin. This is where we left yesterday. Okay. We're looking already at next week. We're looking at a roll reversal. Okay. And then we have the little mini support, as you can see here. We drew this yesterday, which is basically it's a mini roll reversal, but it's really also, if you look at this 200 EMA, it's mimicking 4-hour dynamic support. So this is a 15-minute 200. When you drop this to or raise it to a 4-hour, what do you get? Another day older and deeper and dead. What it's mimicking is the future 21. So if this does continue to go up, what will happen is this moving average will move up and to the left, which means this will be touching that next week. And then I could say, well, why didn't you buy it off the 21? Okay. So anyways, that's all of this. But you see the price action, up, 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 down, down, buy, very basic, and then a potential up, up. The reason I don't have it on that time frame is I think on a higher time frame there may be an up, there should be a down at some point, and then a resumption. Okay, so it's just I'm looking at it from a higher time frame. Now the other side of that is if it just keeps going up, then what'll happen is most likely you'll hit this target. I can't even get it on the chart. It'll hit the monthly February target early in the month, which would then set up a counter trend. And I don't even have that outlined here. It's too much. So this right now looks like maybe potential challenge of 10,000, which means it could come down to 9,000, then go up, which is actually the healthiest, right? That's actually the healthiest. Or it could go up to 10,000 and come down, and that would probably create more of a landslide down than otherwise. Hopefully that makes sense. Cool. Next, WTI, my oh my. La 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 la. Oh, oh. Looks like we got a little bit of this going on. This is the ultimate challenge of a double bottom, but it looks like, I mean, look, you had the opportunity, what was this, a week ago to take profit? This is most likely an entry to the downside, a new entry, a new sell. Okay. Now, I believe the WHO, who? The WHO, who? I believe they're meeting today and they're going to discuss the virus, and they might say something that freaks everybody out, and that would contract global macroeconomics, or at least the potential for global macroeconomic contraction, which would bring oil down. So I think yesterday I said, you just need to make a decision. Is that what you think? Don't worry about what I think. Worry about what you think. If that's your plan, if that's your idea, if that's your thesis, your bias, then you'd be trading it. Okay. Okay. I'm making the sense. This would be a terrible place to sell. Remember, you're supposed to sell high. I drew this as an area. So you had your chance down, 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 up, up, sell for a down, 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 down. Doing something now, you're just slow as molasses on a cold Georgia morning. Okay. Cool. Gold still sort of in the range. Okay. Okay. And this. So really, this has been going up for the whole week, but it's inside, right? You can see it's an inside. But from this point of view, I want you to look at this and say, you might say, I mean, we don't, I mean, it comes down to your opinion, but I might look at this and say, this is range bound from the whole beginning of the year. You might look at this and say, it's uptrend. Cool. So you got to pick one. So how do you do this? Well, if you're a bull, you need to have bought low, which you had one or two chances, and then wait for the breakout. Okay. If it does break out, then you can wait for the pullback and buy again. Standard operating procedure. Okay. If you are not a bull, you don't have to be a bear. You just have to not be a bull. Then your plan would probably be to sell high off the high resistance, which we'll call 1600. So as you approach 1600, you'd look to sell. As you hit 1600 or nearly hit 1600, that's when you start looking for reversal patterns to the downside, and you're like, aha, that might be my opportunity. You're not expecting a break to the downside. You're only expecting, you know, a move from the top of the range to the bottom of the range. So in that case, even if you're just neutral, there's still an opportunity there. So you'd be selling around 1600, and your target is 1550. I mean, it's not even that much money, but you know you can eat it, so that's good. You can't eat gold, but you can eat you can eat that trade. So anyway, so that's how you'd look at it. You're either a bull on that or you're not a bull. All right, so that was Bitcoin, gold and oil. Let's do yen yens. Let's do yen yens. Cool. Nice. Let's take a look. So right now, my bias is still risk off. Okay. USD yen neutral to down, but notice that what this is really telling us is yen is stronger than dollar, and as a risk off guy, that's kind of what I'm looking at, because in in a normal market, okay, in a normal market, dollar and yen would both be strong in my theory. So in this case, I look at it and say, should I be selling? Should I be buying dollar against stuff, or should I be buying yen versus stuff? Okay, and this one is yen play. So let's go CAD here. We did CAD on the other time frame, right? This was if you were a bull, you would look for the up. Remember, I said this is where you'd be challenged in the role reversal. Then you'd look down. At that time, there was a potential for next week's swing, and then you'd go up. That's if you're a bull. Now you can see down, 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 up, 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 down, 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 down. So basic price action if you're a bear. Okay. So yeah, that's that. It's moving hard and fast. I wouldn't be shocked if it hit the target early, counter trended back to 82.50, and then we'd have to look and see if anything's changed in the risk off bias. Aussie yen, this is just what I just did on the CAD. This is the bearish side of the trade. You can see I'm actually short here. Down, 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 right? Well, look on the smaller time frame. Down, 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 up, sell, 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 down, 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 down. This is the double target, the weekly exit and the monthly exit. Up, roll reversal, 21 EMA on the 4H, continuation. Now, that is redonkulously aggressive, which then sets up the high potential for um, for a February counter trend. Do you know what I'm talking about? And that would actually look like this. By, let's say, the middle to end of February, we'd be all the way back here. Okay? What do you think? Cool. Kiwi, right? Big drop early January, false rally, right? Down, 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 up, sell, 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 down, 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 down. But this one hasn't hit the monthly target for January. The projected low for January was down here at 70. And the interesting thing is, this being the top is the MM3, which does predict an MM1. So that's just a standard ordinary boring monthly swing trade. Okay. I don't know if we have time for it because typically you move all the way down this way. You don't typically have a big drop 100% retracement and then the move. That's very unusual. The only thing is, that's what we predicted months and months and months ago. So we got lucky. Very nice. Now, if you are sick of this downward move and you're like, man, it's time to get risk on, well, this would be your price. Not that you would buy it at 71, it's less than that, 70, 80. It's not that that's where you would buy, but that is a very key pivot in which you would look for a reversal. So now you'd have to ask yourself, what would a reversal look like? Maybe not on a 4 hour, but how about on a 1 hour? Or how about on a 15-minute chart? What would you like to see as a bull? This won't make you a bull, but if you're already a bull, you're just trying to time your entries, right? What would you need to see on a 15-minute chart to make you a buy? Or realistically, what'll happen is you'll get a double bottom, higher high, higher low, 1, 2, 3 type reversal pattern on the 15-minute chart. And then most likely you'll see the whole thing happen a second time. So what'll happen is, like, let's see if I can draw this in a logical way. You would get like, come on now. You would get the, oh, won't do it. Hello. I guess I should use a mouse someday. Huh? All right, you get the higher high, higher low, double bottom, let's say, and then you get this. Okay. Now the interesting thing is, it would probably then repeat the whole thing, and you'd get a double bottom of a double bottom. Okay. And the only difference is it's reversing on multiple time frames. Okay. So always remember that, especially when you're trying to reverse a market. Okay. Does anyone remember the analogy on how the foreign exchange market reverses? The, the Forex market reverses like an old man easing into a hot bath. So imagine this is going to be very slow reversal. You're going to need to see it on multiple time frames. Everyone's got to be on the clue train that this downward move that's lasted for, well, the whole month is come to a conclusion, and it needs to slowly reverse from bullish to bearish, from bearishness to bullishness. Okay, it's not going to be a V-shaped reversal. It's very, very rare. Okay. No and no. Okay. Well, let's look at this one. I just in very similar fashion to the USD yen, Euro Swissy. I mean Swissy yen. Look at it the same way. Which one is the stronger of the two? Is it Swissy or is it yen? In this case, it's yen. Therefore, because I'm trying to choose, do I buy dollar versus everything, or do I buy Swissy versus everything, or do I buy yen versus everything? And this answers buy yen versus everything if I'm macro risk off, which I am. Okay, cool. So it just sets it up based on relative strength, which one I do first. Now imagine you got 5 yen pairs all short. And now maybe you want to move over and do all the Swissy pairs, because you'll say, well, see, there's one idea, risk off. And today maybe the Swissy, the yen pairs are the ones that are moving the most, but maybe tomorrow might be all Swissy pairs, right? So you can't just be all what's happening right this second. But as you're making decisions for today, you do all that. You load the boat on yen. Once the boat's loaded, you don't want to just keep loading it, because now you're not getting any diversification. You have your one idea, risk off, loaded on yen only. Well, you can get the same idea with then 5 Swissy trades, right? So I'd rather you have 5 Swissy trades and 5 yen trades than 10 yen trades. Okay, hopefully that makes sense. So let's look at our second best choice, and our second best choice in the moment, but maybe not longer term, is Swissy pairs. So like Here's one we planned yesterday. Do you remember this? We had the down, 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 down. It's a breakout. Look at the roll reversal. Look left, drag it right, kick off the 4-hour 21 and next week's sell zone. Oh, look, we made money. That's how you do it, son. Boom. Yeah, that's yesterday's webinar. You got it, right? Oh, 60% of the time, it works every time. So that's cool, right? So I'm short here, I'm short here, I should be short here, I should have another one there, right? Coolio. Hey, by the way, did you guys watch my 2 videos yesterday? One I did yesterday, and one actually I did the day before, but the way it uploaded while I'm on the road, whatever. But have you watched the survey videos, if you will? You have to do this way. Survey videos. Have you watched those survey videos and left me your comments? I want to know how to help. Okay. I want to know how, right? So right now I'm like, I want to know the issue of like, how do you, are you having problems fitting your trading into your schedule? Are you having trouble like fitting Forex into your day, right? I want to know that. I want to know if you have sort of technique problems, right? And I'll probably do one more. I'll think about it. Not today. I'll think about it maybe on the drive home. Um, I'll think about it more and maybe do one more and get your feedback on other aspects of being a trader. I don't know if it's psychology that I want to think about, or is it money, or but anyways, please leave me comments so I can read them all right? I'm just asking you, how can I help you become a better trader? What's getting in your way? Okay? So Gareth says, what's the best way to let you know? Please leave it in the comment section below the video. Leave a comment, okay, on those videos, right? And keep in mind, one's asking about time and the other one's asking about technique. Try to say, well, let me know how time is a challenge for you. And I break it down to a couple of different versions of what time means, and then techniques, like give me specific technique stuff on the technique video, right? But anyways, cool. So like Molly's like, I'm a full-time employee and I don't have much time to take trades. Yeah, so I need to know that. Please document that. Okay. But keep in mind, I do trade, right? Keep in mind, I do have wife and children, which means like with the children part, I'm going to school events, I'm coaching things, I'm trying to be a decent dad, I'm trying to spend time with them, right? I got that. So I got a couple of kids. I know what that's like, right? Trading does take up a lot of my time. I'm also a full-time student at Harvard at grad school. So, I know what that's like. I get it. So if that's one of your problems, I can focus on finding a way to share like the strategies I've taken to fit all of that and more into my life and not go mentally insane or go postal. So I need to know, like, I need to know how I can help. Okay. I have a feeling that it's not about 5A crosses for you. Yeah, Jimbo says time is the least discussed topic. I used to do training years and years ago about using the clock. The clock is the least used indicator, like, right? So the way I trade actually is I do this. I'm like, oh, I gotta go. I gotta make a trade, right? So, anyways, let me know if how you're struggling with time. Let me know how you're struggling with technique, and so on and so forth. Give me your feedback, okay? Because then I can create resources to make you a better trader. That's the whole idea, right? That's the raison d'etre, right? Okay. So there's that one. Yeah. Okay. Hey, by the way, don't leave it in the chat. I can't read the chat. Go to the video, right? youtube.com/Forex.Today. Go to the video, leave your feedback in the comment. Don't put it in the chat. Okay? Put it in the comment section so I can go back and review them. Because as a YouTube person, I can go straight to a comment section, just read all comments on all videos. So I do read your comments, right? So I can go back whenever I want and read comments. Chat, forget it. Okay, chat's just for live, and even then, I only read what 20%, 10%, 5% of the chat. Okay, I tend to talk a lot in my webinars. All right, cool. So here we are, CAD Swissy. Okay, and you're like, oh man, it hasn't done anything in a while. That's not the important thing. There's more important things. So look, nothing's really happened, right? Well, let's back out, okay, and notice that this is the projected high for the month. So if you were a bear and you know I was a bear, there's my sell zone. And this is the projected bottom back here. And we actually knew this in December, that the projected high was around 75 and the projected low was way down in here. We knew that in this section. All you had to do was be a bear, or you can be a bull. You would have bought it here. Yeah, and only for a week and a half to 2 weeks you were profitable. Okay, one of them was going to win. You just have to be one of them. Traders' biggest issues is they're not bulls or bears, so they essentially don't know what the hell they're doing. Okay, so anyways, down, 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 down. This is the target, right? Now, what's going on in here? People have set up February trades, and that's essentially what's going on. So you may have already missed February's entry. And you're like, wait, it's not even February yet. Yeah, you're probably late. Cool, right? Aussie, Swissy, some of you killed this one earlier, right? There's the projected sell zone. There was the projected target. And a few of you guys sold it and nailed it. Like they sold it here and got out here, which is just absolutely beautiful. Now, this move is very unusual, but it just shows you how weak Australia, or actually, I guess the Australian dollar, how weak the Australian dollar is. It's very unusual. All right. So the swing trading group and we were on, I don't even remember what pair it was. And maybe it was this one, right? But I forget which pair. I don't think it was this one. But anyways, we had a situation like this where we did go through the pivots. So I went back like, what was it, 10 years of monthly pivots on whatever pair we happen to be observing, because I was trying to say, well, this is unusual. This is an unusual. This is a big fundamental issue. This is not a technical move. This is very unusual. Let's just see if we can quantify how unusual it is, right? So I popped on a daily chart. And we're looking at monthly pivots, but we went back something like 10 years, and it happened maybe a total of 3 times. Yeah, Peter, I think you were one of the guys that crushed it, huh? You crushed this Aussie dollar, but I think you got out here. But that's what you're supposed to do. Okay, this part, very unusual, very unpredictable. But if you're following the central bank policy and you hear more chatter about maybe the Reserve Bank of Australia needs to cut interest rates soon, maybe the balance of trade still isn't working out, all this kind of stuff, you're like, well, right, you're going to start, I mean, you're going to try or whatever. You make a decision here. But the breakout pullback, I mean, the breakout of this is actually quite rare. So you wouldn't necessarily plan for it. You can try, but you're being a bit foolish if you, I mean, yes and no, right? So my worry, especially for newer traders, is you're thinking, oh my God, I should be down in here. This is where the big money is, right? Well, and the reason I did something similar with the swing trading group going back 10 years, I'm like, well, if this only happens 3 out of 36 times, should you be planning on making this money? Should you be taking the risk and selling in here? The answer is no. If you happen to be that bearish, then you need to have maybe done a second chance reload here, right? And decided it's all risk, meaning you move your stop to break even, then you're here over zero. It goes lower like you thought. The trend continues like you thought, or it don't. And you get knocked out, maybe double bottom, higher high, you get knocked out of break even, but at least you had the opportunity and you were able to manage the risk associated with the opportunity. But that's what trading is supposed to be. I think the more you guys try to be scalpers, let's say, for lack of a better word, you log into your charts, you sit down for 2 or 3 hours, and you buy and you sell and you buy and you sell. I think the longer you stay in that fantasy, the longer you deprive yourself of your destiny. I want you to look at trading less like a sport and more like a business, right? What is it that you're investing into as far as the long run? What does your research and development tell you? Like, what product should you be making for your customers next year? Or if you're a car company, right? In 3 years, what are your new cars going to be? Well, you need to be engineering that now. You have a much longer term point of view, right? And you start looking at situations like this, you're like, okay, yeah, that might be probable, and you might be able to do it under longer term fundamental analysis that tells you Aussie Swissy will go down significantly in 2020. Therefore, you took this trade like Peter did, got out like Peter did. Now Peter has to make the decision, what do I do now? Well, there's in this scenario, it's very likely to go back to the central pivot. You have to understand that. It's more likely to go to the central pivot. Like maybe 2/3 of the time it goes to the central pivot, and only 1 out of 10 times, maybe even less, 1 out of 20 times, it comes down here. So which one do you take if you're a business? Well, you don't want to buy it up. I don't recommend counter trending because I recommend that you trend trade. So selling here makes sense. Exiting here and being done for the entire month makes sense. And then looking at this and saying, well, the fundamentals are going to supersede everything, in particular with Australia, because of what you see at the central bank and all, and analysis of their economic activity. And you're like, okay, so I'm much more bearish on this than other things. So there's your bias. Then you say, well, the only way I can take this is off the role reversal. So if I get a role reversal in here, I'll take it, but I don't expect the lower low, right? I don't expect it because that's very unusual, but I will take it. I just won't expect it. So in this point, I'll move my stop to break even and be here over zero. Now I got the opportunity. I'm managing the risk associated with the opportunity, and I'm betting on the trend. Now it just might continue to work, but then in this scenario, like I've explained in the other ones, you got to be very careful because there are so many bears making money on this now, and so many of them are now just entering. Imagine like there are some traders that are awesome and most traders that are mediocre, right? So imagine all the new traders that didn't sell here and didn't sell here, but now they want to sell it. So they're late in. What do traders do that are late into a trade? Well, they're early out of a trade. So where are they going to get out? Well, let's say this just drops like a ton of bricks. And in the next 10 days, we find ourselves down here at 64. What do you think is going to happen? Everyone that got in late is going to get out. They're going to get out quick, fast, not old man sleeping in a hot bath. So I would recommend if you're still short here, kind of shame on you on this one, or if you re-entered here, you should count your lucky stars. You crushed this. But you should also say, very unusual. And you're a business, you don't bet on unusual activity. Okay? You plan and strategize based on logic. And if you can do that on the long run, okay? On the long run, you will be successful. Okay? Now, Anthony says, well, on the weekly and all that, yeah. Be careful. Monthly will supersede your weekly. Okay? The only time to really have a weekly supersede a monthly is when you're expecting a reversal and you're like, okay, well, we're at the monthly target and now I'm simply looking for a reversal on the weekly, but really you're still doing the same thing. You're buying at the bottom of a monthly, so or selling at the top of a monthly, but then you're using a weekly, so really the weekly still doesn't supersede, right? So put it this way. We're talking about like a GPS system. You got to know where you're going. Where are you going? Where are you going? Like what city? You know you're going to leave your house. What city are you going to? Right? That's the first question. It's better than driving around the Tennessee countryside looking for whiskey distilleries. Hey, anybody make whiskey out here? Of course, everyone raises their hand. You're like, I got some whiskey for you. Oh, cool. But you're like, no, I need the best whiskey in the world. Do you guys have that? No. All right. So you kind of have to like type in the address, for example, of the whiskey distillery that makes the best whiskey in the world. So I type that into my GPS. But that's my strategy, right? Then the tactics are like, what road should you do and all that kind of stuff. So you plan that out. And along the way, however, there's traffic, there's an accident, there's speed traps. Or you're like, oh, well, I'm going to have to get off the freeway and get onto a highway and kind of go the back roads that way. And I'll end up in the right place and ideally at presumably around the right time. Okay. My fear is many new traders, um, they don't even have a GPS. Like, hey, what you doing? Driving? And you're like, why are you just driving all over the place? Well, I heard that drivers are making a lot of money in their part time. Now I want to drive too. And then I stop and I think, are you talking about Uber drivers? You're not on the clue train, dude. They're not just driving around in their cars making money. You have to drive people around like a taxi and then charge them money and get your commission off of it. Oh, right. So, anyways, maybe that's gone too far. That was too far. But anyways, strategy, man. Right? This is what people will pay you for, which is the same thing as you pay yourself with this. Yeah, I do deserve better coffee. Yeah. Thank you. Yeah. All right. I think my food is going to arrive, and then I got a meeting I got to go to soon. So let me open up the requests. What currency pair would you like me to cover? I know some of you are going to say pound Kiwi or something, which is fine. I'll do it. Sav says, if this happened again, chances are you wouldn't take it. Yeah. How could you plan on something that rarely happens? That's called a bet. Well, that's not what we do. €2 Oz. All right. Oops. No. Euro Aussie. Come on. Not. I'm gonna move this over to the other window. Will it let me? Yeah. No, it just copied it. Now I got Windows 10. It's one of these things like, how can Windows get worse every time they come out with a new version? Well, they work hard on it. All right. All right, let's go in here. Euro, what was it? Euro Aussie? Was that right? Euro Aussie? Yeah. All right. By the way, see what it looks like? These are the charts I downloaded from MetaTraders when I got to the hotel. I'm like, oh, I got to install my charts, so that's what I did. So thank you, metatraders.com. All right, this one is set up differently. Look at that. How cool is that? I got PSAR on there. Is anyone unfamiliar with parabolic stop and reverse? That's what these little dots are. Anyone unsure of what they are? They're actually pretty cool. Especially when you're in a strong trend. This is a little wacky, but it's still interesting. They're they're suggesting where your stop loss should be. So if I'm long right now, my stop should be here. Okay? And the way that it's working is it's using volatility. And the idea behind this is that when the market is volatile and you're making money, Hope says, do I use those? I don't, because they're training wheels. But if you're learning risk management, they're absolutely fantastic. Okay? So, anyways, when you're in a market and there's lots of volatility, but you're making money, it's working for you. PSAR suggests you keep your stop far away. It's trying to let your winners run. However, in other periods when when you're losing volatility, it moves your stop quickly to lock in profit while you're still a winner. That's kind of interesting, right? Now, of course, every time frame it's going to give you different suggestions because you're measuring things. But let's say you bought the 21, the retracement to the 21, right? This is such boring standard, Wayne trading that you could probably see multiple ways to trade this, like I've taught you, right? There's multiple ways to skin this rabbit. Okay, I don't skin cats. Anyways, that's a very standard operating procedure, right? Okay, cool. So you're long off the 21, you're long off the 5A cross, but you're long, let's do this with an ellipse. I have to find that one. Ellipse. So you're long in this zone here, capiche? Cool. So based on that information, where should your stop be? Well, you're here, then it goes up quite a bit. Then it says, move your stop hardly anything. Then it goes up again. So for the third time, it says, basically, don't even move your stop. Lock in hardly anything. And then we have this huge breakout. We're just making money hand over fist. It says, yeah, don't really move your stop at all. So imagine this whole time your stop was here. Then it was here. So what did you do? Lock in 1 pip, but you probably up 30 pips. Then what? Then it said, well, move your stop here. You're like, nah, I just moved my stop 5 pips, but I'm up 75 pips now. And then it says, all right, move a little more. So you locked in another 10 pips. You're like, I'm only up 15 or 20 pips, and this is nearing 100. You're like, it's funny. But when you run into the consolidation, like look at this, making money, making money, making money, making huge money. The stops are not even moving. But soon as you hit consolidation, look, the distance between these dots start expanding, which means it's like lock in profit, lock in more profit, lock in more profit, lock in more profit. So it's using volatility to keep your, to manage your risk and keep the risk low, right? And let the winners run as much as possible. But as soon as you lose the volatility, lock in as much profit as fast as you possibly can, with the idea of trying to let it run. Okay, and of course, you would you would one theory, and I don't always agree with this. One theory, like let's say you were short here, it says stay short here, and then when the dots go from bearish to bull, well, see, if you're a bear, your stop's above you, right? So when the dot goes from the top to the bottom, that's when it's suggesting you should be out and taking profit. So using this as a guide, it doesn't put you in. Now you might have paid a coach $1,000 at a hotel, and he'll come out and tell you, oh yeah, you're supposed to like sell when it's above and buy when you're at the bottom. Of course, that's always way too late and really a dumb idea. If you had a plan and stuff, especially with pivots that are predictive, you might have already been short here for certain reasons. And it's saying, well, if you're already short, this is where your stop should be. And then at this point, it says, hey, man, I know you're still probably short. You should take your profit. And that's what that's meaning. It doesn't mean you should buy now. See, that's the fool's gold that gets pitched, or at least it used to be, right? You're like, because I've heard people say, oh, it's artificial intelligence and fuzzy logic. It looks at all these things. It's really amazing. It'll make decisions for you. And of course, that's a fallacy. That's a dream, right? But it does say if you happen to already be short, right? Here's your stop. Here's your stop. Here's your stop. Here's your stop. Right? Move your stop. Move your stop. Move your stop. Take profit. Get out. Okay, that's what that's trying to say. So I would never go in because of a PSAR, but it's a great training wheels, right, for your stop and risk management. Cool. Cool. Hoorah! Okay. Yeah. So now you throw down a pivot points. So this is going to switch out here, but now you throw in pivot points, and you'll say, well, are they helpful? Well, it told you to buy here. See, PSAR wouldn't have told you to buy. Like, let's add it again. Insert indicators, trend maybe, parabolic stop and reverse. Lime green, what a terrible color. Thank you, programmers, for doing something worthless. And then let's make it fat so we can see it. Okay, there we go. So, like, none of this tells you to get in, but look at the pivot points, right? This is a buying pivot point. This is the target. Everybody understand this? This is a basic standard swing trade based on analysis. So this is literally to the pip. That's the buy zone, which we knew way over here. And this is actually the target, and this is the secondary target. So we knew this, in December. Okay. Now, PSAR doesn't predict any of that, right? Now you could be also predictive and say, well, you're going to take profit right here at this 164 level, because if it doesn't come all the way back down, at least there's potential for it. And all that tells you is bears live up here, bulls are supposed to take profit, so you're supposed to take profit. Should you wait for PSAR to come around? I wouldn't. Just going like back to that other currency pair we talked about, this may go higher for real fundamental reasons, but I would never, ever, 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 ever plan on it. Just give me my money. That's it. Job done. Look how simple that entry is. Look at the double bottom. Higher, high, higher, low, 1, 2, 3, done. Here's your target that you had in December. Like the last day of the month, and you're hitting your target. Like, what more do you need to feel good about your trade? Like, take the profit, dude. Take the profit. Take the profit. Take the profit. Take the profit. Okay. Cool. Some of you guys enjoyed the PSAR stuff. Looks like some of you it was new. Well, please give the thumbs up, and please leave a comment on today's recording and say, hey, I really appreciated that overview of parabolic stop and reverse. Just let me know. I will read the comments. Oh, right on, Joe. Yeah. Well, don't put it in the chat. Leave a comment on today's video after it's available. Okay. So you're going to have to wait a whole 10 minutes after um, today's webinar is over, which should be any second. My breakfast is late, but that's how it goes. All right. So let's do another one. Oh, here it is. I got to go, guys. See you tomorrow. Thanks for being on my team.